Okay. Good morning, everybody. It's about afternoon, so 11:42 p.m. a.m. So today I want to just scan the markets, see any opportunities, but mostly we're going to be picking up from where we left off yesterday, which is just simply studying the markets. And studying the markets in that we are studying in terms of theory, and then we're going to try translate it to practical live when we're learning. So we predicted Euro USD, well, starting with GU to get to this weekly or daily low right here. We've reached there, and sometimes I'm quite good at, I'll tell you what my weaknesses and strengths are. So my strengths are I'm quite good at finding out what the destination of price. I'm fairly good at my entry model. It's the in between that I need to work on. The trigger for my entry model to exist, which is when price pulls back to a fair value gap, where price falls back to liquidity sweep, etc. Then I need practice or help with I can't, I'm so hot. It's actually ridiculous. But then I need practice with, okay, I know where price is going to get to, but I don't know where it is in the prospect of it getting there. For example, I know that my destination when I'm traveling from England is to Paris, but I will be not the best at finding out how to buy a ticket, which plane to catch. If I need to only take one plane, where the airport is in France, how far it is from Paris. So though my target is to go from London to Paris, how I get there is where I struggle with. I know that I'm going to Paris. I know that that's the destination. Similar to how in Price, I know where Price is trying to go to, but how it gets there, where it is in the scheme of getting there. For example, Price may be, trying to get some liquidity to fuel the move to the target, and that getting liquidity is actually going against us. And then the trigger for my entry model is just a bit of nuances more so than I don't know what to do. Nuances in the sense that sometimes price can show me that it's pulled back to fair value gap but doesn't respect it, or it has a liquidity sweep, but it's a liquidity sweep to continue going in one direction. So sometimes it's quite difficult to find an entry. So here we swept Asia highs, swept Asia lows from this consolidation. Then we swept the highs again, displaced downwards, pulled back, created low low, pulled back, didn't close above this, and then we delivered. With EU, we were expecting price to come up here, didn't. It just continued going lower. And in truth, take out this low, which is our target right here. So probably be the next target. Let me see the daily time frame. Maybe target over here. So the concept behind this was that we had looked at market structure and we saw a SMT divergence. EU created a higher high. GU created a lower high. Whilst for bearish, this was the long-term high, and this is the intermediate-term high, both of which we expect price not to close above. And then, of course, the same would be for EU, and that this is intermediate-term high, and then we wouldn't expect price to come above either. Well, not either, but just this. I like this because ITH is within a fair value gap, strengthening it. This LTH is within also a fair value gap, which strengthens it. Cool. So we go up to episode 3. So in episode 3, it says internal range liquidity forms within a price leg during a retracement. Look for short-term high lows inside the leg. These hold liquidity. Watch for stops above, that's below short-term high, or an imbalance in that same range. What I'm looking for here is watching these old highs and lows to be taken, because he's saying to start on the 15 minute. So what I'm doing differently, I know we've kind of listened to all this stuff already, but what I'm doing differently is asking my questions. Sometimes when you're being taught and you're being taught the way of your teacher, not every teacher is always going to be a good teacher. Not every teacher is always going to be compatible with how you ideally would like to learn. Now, there is a skill where you can learn from anybody, whether regardless of how they communicate what they're trying to say, because you are listening to what they're saying, trying, you're involved, you're intentive, uh, listening intently rather into what they're saying, and as a result, you can actually draw information from people or methods that you wouldn't really pull information from. So normally when you watch a video like this, you just have to kind of learn over time. But I think what we're going to do differently is ask a question, but find it. The difficulty when you're watching a video like this is that you can't ask a video a question because it's a video, right? But what you can do is form questions from the video and then go looking for the answer. So my question here, this is the low, this is the high, right? Okay. Now I can see the start from 2 a.m. and this is around 10 a.m. So this is from London session, which is 2 to 5, and then New York session, 8:30 to 12. So within London and New York, excuse me, there was a range, right? Basically, start of the day to the current time, there's a range. Within that range, you form a premium. But whenever you're creating higher highs, you'll always be in a premium. So as it was going higher, higher and higher, price then created, obviously, it has loads of places where it's got buy side liquidity. And on this time frame, it's just a 2-minute, we see that the price rallied up, broke structure downwards, took out this swing low with a displacement, then retraced, and then obviously could have sold to this an equilibrium level. Now, albeit that's cool and all, I am looking at price right now and I'm seeing that this is the buy side liquidity here. But the buy side liquidity here, right? What happened? Price took out. Price, I don't know if this is displacement or not, to be fair. It probably wouldn't be because doji. So there's no sell off here. Okay, but price displaced down here. It's kind of like two questions. Would this count as a displacement to the downside? Because the only difference between this and this is that this displaced from the higher high that was created. This is a lower high and it displaced downwards. So just because it's a higher high, does that mean that's what makes it a market structure break? Because technically we broke structure and we broke structure with a displacement. So surely pulling back to this fair value gap is good enough for a sell. Okay, so this is 8:30. We didn't actually take liquidity to fuel the move. Okay, that's fine. So time. So start the market open. Okay, cool. On 8:30, the liquidity got taken. Okay. Can I answer my question? Okay, so this is cool. A key. Don't use random fair value gaps. I think sometimes I'd be using fair value gaps and giving them power based on the time frame I formed them from, but it should be based on the fact that we've taken out liquidity. And there seems to be a strong liquidity because swing high or double top represents such. means by old highs. I don't like this guy's version of it. Notes. I don't like these notes at all anymore. Okay, this makes sense. He looked for some liquidity from time, from the 15-minute time frame. For example, this right here would have been liquidity. On the session swept above it, which lines up with Asia's highs. We displaced downwards, broke structure, pulled back, that's your entry. Okay. Equivalent for 3 o'clock my time. Oh, basically, why I'm here is I want to know why you enter on this one versus this one. Because technically, high highs, market shift and continuation is stronger than here. I mean, you can argue this is liquidity, but I think I googled this yesterday, but I still want to re-see it because they said to enter on the stronger pair if it's going up. But how do you know which one's stronger? So according to this, I like this idea. I want to know about this idea because I just learned this silver bullet, which is from it's 10 to 11, I believe, for EU. So that would be 10 to 11 and 3 to 4. So New York opens at uh, if New York time is Eastern time. Yeah, 3 a.m. New York time is 8 a.m. So it'll be from 8 to 9. And then what about from, I believe, 10 to 11? So yeah, 3 to 4. So 3 to 4, 4 hours? That's 5. Huh? And 3 plus 3 is 5 hours. Yeah, it's still 5 hours. There's 4 today. So it's going to be 2 p.m. instead. This might be 7 then. And 4 hours. Excuse me. So 7 and 2. Okay. But you can use the silver bullet. 7 a.m. my time, 2 a.m. my time. 7 a.m., 2 p.m. Sorry. So this would be 6 to 7 as well. We go back to the ICT Killzone and silver bullet. So the ICT kill zones and the ICT silver bullet are two of the most popular concepts. Excuse me. The ICT kill zone and the ICT bullet are two of the most popular concepts in the entire ICT method. On their own, each one helps the trader isolate the windows of the day when liquidity is deepest and institutional activity is the highest. Most traders study them separately and never connect the two. I didn't study ICT bullet, silver bullet. I've only just been introduced to it. I've heard of it months ago, looked at it recently, literally yesterday actually, and then I'm studying it now. I understand the concept of it. It's basically the same model, but from very specific windows of time. On their own, each one helps the trader isolate the windows. Yep, the separation is a missed edge. When I look at my own results, the cleanest setups almost always appear at one specific moment when the silver bullet session falls entirely inside an active kill zone. That is the overlap, and it is where the two models reinforce each other instead of competing. But within the kill zone, the London kill zone is from 7 to 10 a.m. Um, it probably would be from 6 to 9 now, isn't it? With the 4 hour difference. But the exchange is 7:10, which is 5 hours. So it's actually still, according to this, obeying 5 hours, which is interesting. Hold on. 20 minus 4. So 5 hours behind. What? Okay. So 7 to 10, 7 to 8. Um, wait. 8 to 9, 3 to 4. And then the kill zone for this is from 2 to 5. They're gonna overlap no matter what. This guide is the complete explainer for ICT kill zone and silverbird overlap, which what each concept is, where the two overlaps occur during the day, the step-by-step trade flow I run on each one, the common mistakes I see traders make, and the questions I get asked most often. If you are new to either concept, read the dedicated first and come back here. Let me just have a quick glance. Yep. What? No, it's not 12 to 3. Wait, how did they overlap then? We're gonna have a quick break, just grab some water and some snacks. was bringing up my noodles, but I was stuck. There's kind of like four things in my hands were burning because the noodles is in hot container. I'm good now though. So 3 to 4, 8 to 9, 8 to 9. Uh, yeah, I'm gonna actually call it here. I know it's a bit early, but I'm gonna do this off stream just because I'm gonna eat and I don't want to like water down this quality, even though it's quite low, just being raw. But I don't want to water it down to the point where I'm not trading on the stream. So I'm probably gonna just come back tomorrow, but I'll come back with more study. I'm gonna do this off stream. Shout out to everyone that tuned in. We go again tomorrow. Peace.